All right, we are back. There is no way to sugarcoat what happened in U.S. stock markets today. It was a bloodbath. So the Dow was down over 4% today. The Dow in only 4 days is down over 12%. The Dow closed minus 4.42% today. The S&P 500 closed below 3,000. The NASDAQ is well below 9,000 now at 8,566. The crude oil price, and this is really, really bad for the oil industry. Actually, before the stock market dropped today, I was actually planning on doing another short video on oil because there are so many red flags now in oil that it's crazy. So I'll save that for another show. But anyways, the WTI oil price down to $46.23. The Brent crude down to $50.75. Just an absolute bloodbath today in the stock market. Things have gone from risk off to what I am calling extreme risk off. And what I mean by extreme risk off, and I know I'm going to get dozens and dozens of comments in the live chat section asking about specific gold stocks. And rather than answering any of those, I'll just direct everyone for $5 a month. There is a podcast behind my Patreon account paywall in the last 2 days, specifically talking about how things are going for professional money managers from normal risk off, which would include gold stocks in there. Gold stocks would, for some money managers, would be part of a risk-off strategy with cash and treasuries and dollars and some other things with gold stocks, gold exposure and gold stocks. That would be a risk-off strategy to extreme risk-off. And if you want more details on that, I'm sorry, you have to go behind the Patreon account paywall for $5 a month. I spend a lot of time making this content, and if all my videos, there's going to be no ad revenue, I have to be able to make something to pay my bills. So thank you very much to my over 300 Patreon account contributors. What we're seeing, though, is that the margins for these gold miners are still going to be good, because the gold price is still holding up fairly well above 1,600 and the oil price is crashing. So the Q1 2020 margins for a lot of these gold miners are going to be superb. However, in an extreme risk-off black swan environment where professional money managers have no certainty, no volatility, we even have Neil Cavuto, who's normally a permabull. If you're not familiar with who Neil Cavuto is, I'll just give you a quick explanation. So normally he's on Fox Business, and he also has a 1-hour show, I think at 5 p.m. Eastern time on Fox News. And he does business and markets. And he actually said, and I was shocked because he's a permabull. He's been a permabull now for a while. He actually said today in his 5 p.m. show, he said, there is so much uncertainty. I can't tell what's going to happen next. Markets hate uncertainty. He was like, sell everything. He actually said, sell everything. I was shocked that Neil Cavuto said that. So you have that. You have people looking at actually paying attention now to the Cerveza problem, where they were just ignoring a lot of the stuff for weeks now. People like me were warning. Chris Martinson was warning that why hasn't this affected the stock market yet? And yet over the last 4 days, the Dow Jones Industrial, not 4 days, excuse me. The last 4 days have been really bad. The last 4 days we are down 12%. But let me give you some more perspective here. Since Friday, February 21st, the Dow was actually still above 29,000 then. And here we are, less than a week later, we're at 25,766. So barely a week. If you took a vacation, you went to go see your kids in college, you took a vacation or something like that, maybe a local vacation since no one's doing any air travel, maybe you just drove somewhere, maybe you did a local vacation, you drove to a lake or the mountains or something, and you went and checked your stocks, your SOL. Shit out of luck if you don't know what that means. Okay, so we have Janet. Got to put a little humor into this. Got to put a little bit of humor into this. So we have Janet Yellen, who is now saying that the Cerveza problem could drag the U.S. economy into recession. Okay, thank you, Captain Obvious. I mean, Miss Yellen. Just another interesting story that caught my eye, too. In the last couple days, we have Goldman Sachs coming out and warning that the Cerveza problem could wipe out all corporate earnings growth for 2020. What that means is that with the multiple expansion. So normally Wall Street investors, so Wall Street investment banks, mainstream financial money managers, mainstream stockbroker dealers, they point to how the stock market was not overvalued when the Dow was over 29,000. They talk about how the forward PE ratio was only 18 times earnings, not accounting for financial engineering and share buybacks. A bunch of gobbledygook. So the fact, and they rationalized higher stock prices only a week or two ago with the fact that earnings were continued to grow. Well, guess what? Goldman Sachs says that earnings are not going to grow because of the pervasive problem. The global economy was having problems anyway, the Chinese economy having enormous amounts of problems. So no earnings growth means no multiple expansion, means no justification for higher stock prices. So all those people that were hoping that the cerveza problem would not come to the US, would only be temporary, would only be transitory, they're SOL too. We are getting, if this continues in another, we're going to be down 20%. We're going to be down 20% probably in the next couple of weeks if this continues. There's going to be, it looks like people are going to extreme risk off. So there, like I said, there's risk off and then there's extreme risk off. Extreme risk off means in many cases no stocks, people putting on shorts. Maybe people are going to very defensive stocks like a Clorox or utilities or very, very defensive stocks if that. Things are looking very, very risk off. That's my opinion. Also, you have a situation where no multiple expansion, on top of that, no earnings growth, so no multiple expansion, and then as my friend for hedge fund manager, Kevin Duffy of Bearing Asset Management, likes to point with charts and graphs, and I've interviewed him many times over the years, the last couple years, in the archive section. What Kevin Duffy likes to talk about is the amount of margin debt in the stock market. So when you have stocks going down and you have all these people that were long stocks on record amounts of margin, you have margin calls, you have people selling, it feeds on itself. So you have all these, this is a perfect storm of downward price movements, a perfect storm of bearishness forcing stock prices down. Now, at some point, and this is why we don't have free markets and we don't have capitalism, at some point, the central bankers, there may already be private meetings behind the scenes between the ECB, the Federal Reserve. We don't know. Maybe they'll announce it. At some point, the central bankers and the markets are already starting to price this in with the Fed fund futures rates. So I reported on this a couple days ago. The Fed fund futures rates predicting a rate cut for March were only, I think a couple days ago, around 33%. So it was not likely. The rate cut for April was much higher, 77% prediction. However, things in the last day or two have changed. I believe now the probability with the Fed fund futures for a March rate cut is now way over 50%. I think it's over 70% now and climbing. And there are many professional Wall Street traders who were on the financial TV today talking about how the Fed could do an emergency rate cut without an official meeting. And remember, I did a show only a day or two ago with the former Minneapolis Federal Reserve Bank president who wrote an op-ed in Bloomberg arguing for an immediate 50 basis point rate cut, not a quarter point, a 50 basis point rate cut. That will not solve things. That's an attempt to prevent the asset prices from collapsing because of all the leverage in the system, similar to what happened in 2008. And also because of the yield curve. So let's talk about the yield curve now, since all the things I've just been talking about are leading up to this. So the yield curve, part of the yield curve is now deeply inverted. You have the 3-month at 1.45. It is much higher than the 1 year. It is 1 year U.S. Treasury. It is much higher than the 2 year U.S. Treasury. It is much higher than the 3 year Treasury. It is much higher than the 5 year Treasury. It is much higher than the 7 year Treasury. And it is still a little bit higher than the 10 year Treasury. The 10 year Treasury is now close to, I think, an all time low at what, 1.299 or 1.3 if you round up. So money has clearly retreated there. Jeff Gunlock was talking on his Twitter about how while money may be retreating into U.S. Treasuries, professionally managed money, that the yields on junk bonds are spiking. So that would be part of risk off. You also have the U.S. dollar index. Let me hit the refresh button here. The U.S. dollar index is now below 99. This is the first full day it's closed below 99 since February 12th. So the dollar index is at 98.47. This is now the first day since February 12th the dollar index has been below 99. Which probably means, my educated guess, that people are starting to bet there's going to be big rate cuts, more than 1/4 basis point rate cut coming soon, and probably some type of weird QE program. The stock market is also back to pre-Repo Madness levels. Something that Lynn Alden was discussing on her Twitter. Lynalden. She is very smart. I don't agree with everything she says, but a lot of her points are good. And she is worth following on Twitter. Lynn Alden. Also, another point that Lynn Alden brought up, and I'm looking, since today is a Thursday, I am looking at the Fed's official balance sheet. And over the last 2 weeks, the Fed's official balance sheet is down $24 billion. However, I expect that to change soon, by the way, considering what we're seeing with the stock market and how the Fed does not want asset prices crashing. But in spite of the Fed's official balance sheet down $24 billion over the last 2 weeks, Lynn Alden has been saying that the Fed's purchases of treasuries are going through the roof. So I think the way to explain that, someone was explaining that to me, is that the Fed is mostly buying 6-month treasuries. And then those expire and then they just buy more. So I have the articles for the information and that will be in the information and description section. If you want to read about Goldman Sachs revising all earnings estimates basically down to zero, this article came out on Zero Hedge earlier today. Worst, quote unquote, worst thing in my career, U.S. stocks suffer fastest collapse from record highs since Great Depression. This is the fastest 10% drop on the Dow, as you can see there on your screen, in history. And all this has to do with margin, leverage, high-frequency trading, and then extreme risk off. It's like most things in life and in markets, it's a combination of factors. And if you have the right combination of factors, you have a perfect storm. And in this case, it's not a good perfect storm. Well, it's good if you were buying puts, if you bought puts weeks ago. And I think copper, let me check out the copper price. I don't have it up here. It's like the one thing I don't have up. Let me just check the copper price. I wanted to bring this up before I forget. Okay, the copper price is actually holding up okay for now at 2.533 a pound. Let's see here. Let me see if I can get the chart up. So a couple weeks ago, it was at $2.62 a pound. Okay, the copper price is teetering. Nolan Watson, CEO of Sandstorm Gold, did a very interesting interview that came out on the Kitco YouTube channel. It's on the Kitco website from a couple days ago, and it's only 8 minutes long. There's some very interesting insights into there on how desperate for capital some of these copper miners are. So copper right now is right around the break-even price for a lot of copper production. So there are, in other words, there are a lot of copper miners that are barely keeping their head above water. And that if the copper price goes much lower, the copper miners are in deep, deep, deep trouble. So these copper miners could be, if things get even worse out of China or with the global economy, the supply chain, these copper miners could be in big, big trouble in the next couple months. Which means that's opportunity then for some of these larger precious metal royalty and streaming companies like Franco-Nevada is just bigger and better than Sandstorm Gold right now. I'm hoping that Sandstorm Gold will eventually maybe turn into a company as good as Franco-Nevada. But Franco-Nevada is really like the main, I'm trying to think of the right phrase here. Franco-Nevada is really the milestone here that everyone wants to be. So they have good diversified cash flow. They're making tons of money now. They have enormous revenues. They have 90% gross margins. They have only 40 employees with $21 billion, approximately 40 employees with like a $21 billion market cap, or it was $21 billion prior to this correction. So those companies that do not have over-leveraged balance sheets, precious metal royalty and streaming companies, they are licking their chops. If the copper miners, if things get real bad for the copper miners, and it's looking that way, that over the next year or two, some of the copper miners are going to be in big, big trouble. Again, I'm not trading I'm not buying puts on any of the copper mining ETFs, and I'm not looking at the balance sheets of some of these copper miners. But if I was managing money, that's what I would be doing. If things get worse, the copper miners are in big, big trouble. I don't know how many more stimulus plans China can pull out of the hat. Yeah, so I'll summarize things again. I will repeat myself. Extreme risk off, plus leverage, margin debt, high frequency trading algorithms, the Goldman Sachs announcing no earnings improvements for increasing multiple expansion for stocks. All those things confluing together in a very short amount of time, and that's how you get a really, really bad last 4 days. Because this news should have been priced into the stock market a while ago. Let's be honest here. If the stock market was actually rational, this should have been, and it's not, this should have been priced into the stock market a while ago. But in spite of the plunge protection team, in spite of manipulation attempts, the stock market did what it did the last 4 days. Which means the Fed's going to have to pull out, and the other central banks, maybe they'll coordinate, maybe there'll be currency swaps, larger and larger bazookas. It's the law of diminishing returns. Each emergency liquidity injection gets them less. Let me read some more. Let me look at some ETFs and stocks. Transocean, a company I talked about behind the paywall there for my Patreon account contributors that I was really worried about. It dropped 12% in 1 day. Yikes! Oh, poor Transocean. Not looking good. That 12% drop is nuts. In a day. That's nuts. That's one of the largest drops, other than a biotech stock or a company that had to restate earnings. I mean, even now with large cap stocks, if they restate earnings, the large cap stocks tend to not really crash that much anymore. In the past, when a company restated earnings, or there was a biotech stock that didn't get the FDA approval they were looking for, yeah, there'd be a 20, 30, 40, 50% drop in the stock. But for an oil stock to drop 12.2% a day, that's massive. Seadrill, oh, poor Seadrill. Oh no, Seadrill. Seadrill's almost definitely going bankrupt again. Seadrill's barely above $1. Poor Seadrill dropped 15% in 1 day. My God. The investment bankers and restructuring specialists, and I'm using air quotes here, really did Seadrill a disservice when they reemerged from bankruptcy. They were destined to fail. That was very screwed up. Almost everything on my screen is red. But I have a lot of commodity stocks to look at. Let me take a look at another watch list I have, and let's see here. The VIX. Oh, the VIX. Yes, I remembered. I was trying to remind myself. I don't have notes. I was trying to remind myself. I need to talk about the VIX again. Did you guys see the video last night I did about the VIX, right? Guys, now that the VIX today, it popped another 42%. So now we're way over 100%. At least one of those VIX ETFs or ETNs, one of those is going to blow up. Okay, we've had unprecedented levels. That VIX pop now is even larger than the February 2018 VIX pop of 116% in a short amount of time that blew up one of those VIX ETFs and VIX ETNs. So a couple of them blew up in a very short amount of time, lost 80%, but they shut down one, and I don't think they shut down any more than one. But Christopher Cole is going to end up being right. Again, do not buy and hold the VIX. Okay, go and watch that video I released yesterday. Do not buy and hold the VIX. Do not buy and hold the VIX. Bad idea. That's a crazy pop. What that tells me now is you have a lot of professional money managers who would not normally buy the VIX, and they're hedging. They are buying the VIX. Probably these guys are starting to put in big short positions. We're looking more and more likely, and I'll talk about this on the oil video, more and more likely with the articles that I've been seeing in the last week, more and more likely that this is going to be, unless there's a unbelievable turnaround, that this is going to be one of the biggest oil busts in the last 20 years. Maybe even longer than that. TLT, the iShares 20-plus year Treasury bond ETF, going up. Still going up. That's one of the few green ones. The VIX, the TLT. Wow, I got a lot of different ETFs here. It's like the only one that's green. Wow, I got a lot of different ETFs. That's funny. Just a bloodbath. Particularly in oil. Pan American Silver did drop almost 12%. That might be a buy there. That might be a buy. That's a pretty big drop. I wouldn't buy all my position at once. Again, never buy a mining stock position all at once. I get all these emails from people like, I watched a YouTube video and I bought all my mining stock position at once and I'm losing money. What should I do? Don't buy all of your mining stock positions all at once. Never. All capital letters, never, ever, ever. Let me make sure it covered everything I wanted to cover. Oh, okay, let me read this guy from Bloomberg TV, the Zero Hedge article. Went a little off on tangent. Dow has collapsed from a record high into correction in the space of just 6 days. As we detailed earlier, this is the fastest collapse from an all-time peak since 1928, just ahead of the Great Depression. Again, what did the Great Depression and now have in common? Lots of margin debt. Enormous amounts of margin debt. That's what they had in common. So when the margin debt of people that are long stocks, when that goes in reverse, margin calls and then forced selling. As Guggenheim's Scott Minerd declared on Bloomberg TV, quote, "This is possibly the worst thing I've seen in my career. It's hard to imagine a scenario in which you can contain the pervasive problem." Adding that Europe and China are probably already in recession. We've known that for a while covering this, but now it's starting to become obvious even to the stuffy shirts in the expensive suits that are professional money managers on Wall Street. And US GDP will take a 1.5 to 2% hit. Quote, "The stock market," yeah, probably more than that. "The stock market could be down 15 to 20% and will likely force the Fed's hand. Investors are piling into safe havens, bonds, and bullion as they dump stocks. The market now is demanding 3 rate cuts this year, with the odds of an emergency cut in March soaring, and stocks have erased most of the not QE repo liquidity bailout gains." Yeah, so we're back to the Fed's balance sheet. The stock market is back to the levels before the Fed ended the quantitative tightening program and then started the, quote, not QE program. Mark says a foregone conclusion that markets drop another 2-3% tomorrow. Yeah, normally these high-frequency trading algorithms go on momentum, so probably down. Unless there's some type of press release with President Trump or the CDC, and someone announces a vaccine, maybe that could get a little pop for a short amount of time. Maybe. Probably not. We got a super chat from Primal American. Thank you for the super chat. How many people are going to freak out and pull their 401k accounts? Some people are going to lose 75% net worth, if not more. Well, stocks aren't down 75% yet. So I don't think a lot of people are pulling yet. But yes, you are correct in general about the direction that in 2008-9, a lot of Americans did pull their accounts out at the wrong time. They sold at the bottom. Retail investors tend to buy at the top and sell at bottoms. Not all of them, some of them. A lot of people listening to this podcast, probably not. Regular mainstream people, probably more likely. Jeff says the TSX in Canada got closed early. Yeah, no surprise. They have a lot of commodity stocks there. It sounds to me, I didn't look at the Canadian oil stocks, but if the American oil stocks are getting killed like that, I'm pretty sure the Canadian ones got killed fairly good amount too. I don't know exactly how much. Again, I didn't look. Jeff asks, maybe it will be better tomorrow. Is the Fed going to announce an emergency meeting? Is there going to be an emergency plunge protection meeting? Is Steve Mnuchin going to put out an emergency press release with plunge protection team in the letterhead? By the way, isn't Steve Mnuchin now on the Team Awesome Force virus team? So what? It's Mike Pence in charge. It's Larry Kudlow. Isn't it Steve Mnuchin on the team too? It's a bunch of Trump's economic guys trying to deal with a ridiculously difficult and complicated quarantine problem. A bunch of armchair virologists. And now the Trump administration wants all agencies to control all he wants them to report all their stuff so they control the narrative and the press releases. Welcome to dystopia. By the way, I don't trust anything the CDC is telling me right now. I think they've been lying for a while too. The lies are not as bad as China, but they're bad. Anthony says the largest gains in history will give us the biggest plunges. The problem is that it wasn't real growth. It was not real margin expansion for the last couple years. It was financial engineering with share buybacks. And then it was multiple expansion. So what Wall Street was doing is the share buybacks were occurring to keep the PE ratios down to financially engineer earnings higher. And then Wall Street and the other mainstream money managers would go on financial TV and write articles, and they would demand multiple expansion and say that the stocks were still cheap. Even 2 or 3 days ago, there was some guys on CNBC and Kavuto that were going on, and this was before the Dow crashed in the last 2 or 3 days, but they went on, I think, like either Friday when things started or Monday, and they were saying that the forward PE ratio for large cap US stocks is still only 18 times earnings. But that makes a lot of, let's just say, inaccurate assumptions. Also relies on share buybacks. I got a super chat from Justin. Thank you, Justin. I appreciate it. Greg gave me a super chat. Thank you, Greg. Mark says he's long extra rolls of Charmin Ultra Soft. I don't know who Monica Perez is. I just follow Chris Martinson's updates. I've known Chris for a long time. Shell May in Chicago says the stock market is still too high. It should correct some more. The momentum is down now. These trading programs, human beings don't even have to affect this. But you have the professional money managers, the human beings that are still left, they're going to extreme risk off, it looks like, with their behavior. Although it is a little interesting that the dollar index did fall, maybe that's pricing in these Fed rate cuts. It is a little interesting the dollar index closed below 99 for the first time since February 12th. And I don't think there's any chance of the Fed being able to engineer the stock market higher without drastic balance sheet expansion. They're going to have to do crazy things with their balance sheet. If you think what they've done now with their balance sheet is crazy, they're going to have to do a lot crazier things than this. The global supply chain is still a mess. And I think it's getting worse. Francisco asks if he should buy the dip now or later. In my opinion, I would not buy the dip now. Buy the dip in what exactly? You mean stocks? I'm not buying any stocks right now. Any regular stocks right now. They were promoting on the mainstream business channels like Clorox. They were saying people are going to be buying more wipes, more bleach, more wipes, more of those Clorox wipes that are in the container that you can get in the grocery store or Target or Walmart. That was a defensive play. George Gammon. Shout out to George Gammon in the live chat section. The law of diminishing returns also describes my ad revenue now for making YouTube videos. The harder I work, the less I get. Patrick says Transocean dropped 42 cents. They dropped 42 cents, Patrick, in a day. He says they gained that in a month last year. Transocean has a lot of headwinds now. They also did a really bad acquisition. They have 15, according to a really good analyst I follow in Seeking Alpha, Vladimir. Can't remember his last name offhand. It's behind my Patreon account paywall with a podcast on the oil market talking about the article. And the analyst is basically saying that Transocean did a really poorly timed acquisition, used a lot of their capital, and now they have an additional 15 drill rigs that are not generating them any cash flow. So it looks like Transocean's financial situation is much different. Their balance sheet is more stressed. And if that day rate falls, the day rate has not fallen yet. I haven't seen any evidence that it's collapsed yet. But if that day rate falls for their rigs, the deep water offshore industry is looking at a lot of bankruptcies. A lot more than they have in the last couple of years. Cathedral obviously went bankrupt and some other firms did too. Armored Ghost says he is long Jason Burak. So you're long me. Are you a Patreon account contributor? Hey, if you're investing in me, it's $5 a month. And I will work my butt off to get you good content behind the paywall. If YouTube's gonna keep taking away all ad revenue. I've had another 2 videos, no ad revenue this week, and I didn't even mention the CV once in any of them. It could be my thumbnail picture. Maybe someone is manually looking at my channel and looking at some of the thumbnail pictures that I have up. That could be it. I don't know. It doesn't matter that much because as long as I have growth in my Patreon account, the amount of contributors over 300 and that's growing, I can still keep doing the content, and the Patreon account contributors are going to pay my bills. So I could just, that'll subsidize then the ability for me to make the free content here. I got another super chat from Dimitri. VIX long or short ETFs blowing up? Dimitri, did you see the short video I put out last night? I listed the 7 VIX exchange traded funds and exchange traded notes. That could be in jeopardy. It's tough to say which one. I haven't spent a lot of time looking at each one. Christopher Cole just put out another in-depth research report. It may list the ones he thinks are most likely to have problems there. Christopher Cole is the volatility hedge fund expert. Okay, some of the stuff he talks about is just really advanced stuff. There's a lot of financial professionals I've sent his work to and that don't understand anything he said. A lot of them are mainstream, though, who don't understand what he said. Is it time to buy very out-of-the-money calls on VIX? You mean the VIX going up to, what's the VIX at now? The VIX is at 39. You mean like buying, what, a 50 or 60 call on the VIX? Is that what you're talking about? Okay, so Christopher Cole, Dimitri, I don't know if you've watched my VIX video that I put out last night. So Christopher Cole has done 3 really good interviews in the last 2 weeks. He did 2 free interviews, one for Hidden Forces podcast with Dimitri Kofinas, which is very good. He did another free interview with Eric Townsend and Macro Voices, also very good. And then he did an interview behind the paywall for Real Vision TV, which they have not released for free yet. Also very, very, very good. I think the best one of the bunch was probably the Real Vision TV one, but all 3 were very good. And the reason he did all those interviews, and I think there's actually another interview that just got released behind the Real Vision TV paywall on something else, is he is promoting his new volatility and 100-year portfolio paper. Yeah, Dimitri, I would not, this is just my opinion, I would not buy a lot of out-of-the-money calls. If you want to buy a few, I would not buy a lot. We don't know what the Fed's going to do. If the Fed steps in a week from now and does 50 basis point rate cuts and goes to 100 billion or more in not QE, maybe 120 billion or 130 billion, not QE, that could blow up your trade. We don't know. What worries me is that behind the scenes, these central bankers are all having emergency phone calls. That the European Central Bank and the Federal Reserve and the Bank of Japan and the People's Bank of China are all coordinating stuff behind the scenes. That's what worries me. Because these are basically unelected bureaucrats. They are way above the law. There is no accountability for them. They can make as many mistakes as they want, and they're not really held accountable. Voters can't vote them out. The head politician in countries can't really fire them. Look how hard it would have been for President Trump to fire Jerome Powell. Can't really fire them. Central bankers are running the show. And their level of hubris is at all-time highs. And if you don't believe me, look at the Twitter for Neil Kashkari and look at the statements that central bankers out of Europe and the US have made about fighting climate change, fighting wealth inequality, and now fighting the cerveza problem. So we don't know what the central bank... There could be emergency meetings right now. Maybe I should start sending out some emails and some texts to some of my local contacts here in DC and see if anyone's heard of anything. Tom says maybe emergency rate cuts and a ban on short selling. Yeah, it wouldn't surprise me. No, nothing's guaranteed, but it wouldn't surprise me if they tried to ban short selling. Remember, people forget this. In 2008 and 9, they banned short selling. So they didn't ban puts. They canceled profitable trades for hedge funds, millions of dollars worth of profitable trades on shorting bank stocks here in the US. And other countries, and I've covered this now in the last like 8 or 9 months, other countries, Carson Block of Muddy Waters was interviewed in a Reuters piece. Other countries are already talking about banning short selling. So like South Korea and others. Yeah, I would not buy a lot of out-of-the-money calls on the VIX. I'm thinking coppers. This is just my opinion. Again, I'm not putting any money on this trade. This is not a big bet for me. If I was managing money now, I would consider putting, based on what Nolan Watson said about the balance sheets of these copper miners, how bad they are in the last couple days, and how they're looking for cash like very soon, I would be thinking about some out-of-the-money puts on some copper miners. Okay, well, that's it for tonight's live stream show. I want to thank everyone for listening, and thank you very much to my over 300 Patreon account contributors. It's grown unbelievably rapidly in the last, 2 or 3 months. The last 6 months have been good. The last 2 or 3 months have been great. I'm getting people that are signing up 2 or 3 a day now. It's just rolling. I went from, I think, under 250 to over 300 in, I think, under 2 months. So it's nuts. So it's allowing me to make more content behind the paywall, either written articles or audio podcasts behind the paywall with research, information, and analysis. And then also focus on doing these free podcasts here. Since I'm not really, I don't know what my ad revenues are going to be, but who knows if this video is no ad revenue or not. But I did the best analysis I could. I don't have notes, so most of it's just off the cuff. Again, thank you to my PayPal and Patreon account contributors. Before my brain gets totally fried, I'm gonna head out. Everyone have a nice rest of your night, and we'll see what happens tomorrow. Tomorrow should be interesting. Maybe tomorrow there will be an announcement about an emergency Fed meeting. Maybe over the weekend there will be an emergency Fed meeting. Guys and gals, I am thinking that things are so bad that over the weekend there's going to have to be coordinated central bank meetings. So it's not just going to be like the Fed and the FDIC. I'm thinking it's going to be like emergency meetings with all the major central bankers. I don't know if they're going to meet in person because of the travel restrictions, but conference calls, video calls. The stock that went up, I think, was the Zoom teleconferencing call because their market's assuming now that people are going to have to work from home. Maybe the central bankers are going to use the Zoom video teleconferencing for their emergency bailouts.